Most people don't understand anything about financial technology beyond Apple Pay and possibly Bitcoin. Where is the investing opportunity here?
I think there's a lot. I think when you talk about Apple Pay and Bitcoin, we're typically talking about consumers and merchants. Historically, 10 years ago, when you talk about financial innovation, there's very little of it. Banks, large incumbents, a lot of regulatory pressures, it was hard to crack in. 10 years later, and I've been pretty bearish on what we call mobile payments, but over the last 10 years, a lot has evolved, and now with Apple Pay really going after consumers gives a really nice opportunity to help with, at point of sale, merchants accept payments, whether be it through a mobile phone, be it through other mechanisms.
Apple Pay looms very large over this event.
Yep.
Is it really that much of a game changer?
I think it can be. I think it's still very early. Let's use the numbers. So less than 10% of merchants today have NFC terminals.
Right.
Consumers need an iPhone 6 or 6S, and so that number is still relatively small. But there's now over 1 million people using it. They're making the bet that if you deliver great products to consumers, they will use it. It's the bet that Apple's always made. And in turn, they've signed up a couple of very large merchants like Whole Foods and Subway and McDonald's who are now accepting these Apple payments. And so I think it's starting to work, but it's still very early days. And for this to be ultimately successful, it's a two-sided network. You got to give to the merchants and you got to give to the consumers. And there's got to be a real value proposition on both sides.
As you point out, it's not like everybody is going to have an iPhone, and it's not like every merchant is going to have this NFC near-field communication terminal, at least not for another couple of years, right? 2-3 years. There's that big date next year, which is going to force the transition.
The EMV transition in
2015
in 2015 could have a big effect. I know there are some people working on next-generation terminals that would have both the chip and pin technology, but also NFC and iBeacon. So it could be sooner than you think. But I agree, particularly the small and medium-sized merchants to pay $300 to $500 to upgrade their terminals today probably isn't going to happen right away.
What about the organization, effectively, movement that forced CVS and Rite Aid to opt out of Apple Pay, this merchant customer exchange and their payment solution?
Yep.
Is that currency? I guess that's what they call it.
Currency.
What's your view?
I think we have a mobile payments war going on, and it's going to take some time to flesh itself out.
Would you bet against Apple in the mobile payments war?
I would not. I would not bet against Apple, and I think MCX and currency have their work cut out for them. But I will say this. The idea that merchants would take interchange from 1.5% for the largest merchants, 2 to 3% for smallest merchants, down to close to zero through ACH, which is what they're suggesting with currency, that's a big value proposition to merchants. On the other side, Apple Pay has done a great job with consumers. They have a couple early adopters on merchants, but they need to continue to give to the merchants in order to have this two-sided network take hold. And I think what's going to happen, I don't know exactly with CVS and Rite Aid, but I do think that Apple Pay today is keeping all the data on the consumers. I think if merchants wise up and they get smart, they will potentially ditch MCX, maybe, just a hypothesis, and in turn ask Apple back for all the data. So to pay 150 basis points still as a large merchant is certainly worth the cost if you can get that kind of data in return.
Jordan, what's your take on Bitcoin?
My take on Bitcoin. So I get asked it a lot. Bitcoin, it's all about the lens from which you view it. So Bitcoin is down about 75% off its peak as a store of value, but it's actually up 50% if you look year over year from today. So, but I'm not a global macroeconomist, and I'm not going to comment on the store of value. What I will say is the technology itself is really interesting. The idea that you can have a three-party transaction historically online and narrow that down to 2 parties and effectively eliminate the middleman, that's pretty powerful stuff. And so I think there are certain technologies being built on the blockchain, things like micropayments, things like cross-border remittances that today, if you think about cross-border remittances, it's $650 billion gets transferred peer-to-peer, and the cost is anywhere from 9 to 11%. So is that efficient? Yes. Is it the consumers who need cheaper, better products more than anyone else? Yes. And so do I think it will change?
So Bitcoin potentially threatens Western Union, potentially threatens MoneyGram. What other legacy platforms or business models are most at risk as a result of what's happening in financial technology on the payment side, on the lending side, and on the investing side?
Yeah, I think it's an interesting question. I think everyone is still trying to figure out how the world shakes out. And while I think Western Union and MoneyGram could be at risk, they also could figure out how to be smarter, how to adopt Bitcoin earlier. I think the same is true. Today, there are a lot of technologies that are selling to banks to help them get wise to what needs to happen. So, for instance, in and around commercial payments, we talked a little bit before about B2B payments. There's an opportunity for other people to create, with the card networks, these virtual cards for businesses to start paying other businesses on existing card rails. There's also opportunities to pay through ACH, but ACH on steroids a little bit with remittance data, which is really the important key if electronic payments are going to work. And some banks sort of understand this, and they're trying to work with new players that are coming into the market because they don't want to be disrupted. And in other cases, there are banks that feel like they can build this all internally, and they can sort of keep it as a walled garden, and we'll see how that works out.
Of those three buckets, payments, investing, lending, what does Bain consider most attractive?
I think we think they're all pretty interesting. I'd say we started talking about Apple Pay. I think on the payment side, we're most interested in this commercial payments piece.
The B2B stuff.
The B2B stuff. 50% of all B2B payments are still paper check. That will change. I think on lending, we started out with Lending Club and Prosper and On Deck and Can and Cabbage has all been very exciting. But I think two things are going to happen in lending that we find most interesting. One is the products are going to get more complicated. So we now see new companies arising that are focused on real estate, commercial real estate, residential real estate, non-qualified mortgages. That's really interesting because unlike consumer term loans that are in essence FICO-based lending with a little bit more wrapped around it, the mortgage industry is pretty complicated, and the data you need to collect and how the process works. So we think that's pretty interesting. The second piece in lending is just this kind of next generation supply finance, dynamic discounting, reversed supply chain finance. So all pretty interesting stuff there. And then on the investing side, we've just begun to scratch the surface. We have an investment in a company called SigFig, which is being coined one of these robo-advisors. We think that both on the consumer side and on the institutional side, big data hasn't been leveraged, and I apologize for using such a trite term, but big data hasn't been leveraged in investing yet the way it should. And so if you think about the average consumer, they typically pay too much in fees, they don't get enough return, and they're exposed to too much risk. And all this can be solved through better products, ETFs and the likes, and also better technology.